Market conditions majority bullish here on SP futures, sitting right down about a 0.5% this morning. Still majority at 14 and 14 on the weekly as well. That had turned down. I saw that tick down to 13 about a half hour ago. So getting some retracement right here, some consolidation inside of this range really happening in between the supply location up here and the demand location right here. These are your sellers, these are your buyers, and we're stuck right in the middle right here as we're consolidating across sideways. That actually is bullish, the price structure that's been happening as it's tight inside of this. No real aggressive selling at these levels, and we have bullish momentum. The one of the risk factors is we do have a really extended long-term trend still, and now we've moved all the way back up into this upper range, but we could certainly see some consolidation, some slowdown in this location could be good for markets. S&P 500 closed out yesterday at 14 and 14 on the daily and the weekly. We saw breadth pop back to, well, not a whole lot, back to 67, upper end of that range. Anything above 50, still bullish momentum on the trend condition indicator as well, and not extreme. Not at least it tagged that area, and we could push even higher if we do get a breakout and continuing to move up above this 6,000 range. Here, these are going to be fresh all-time highs, and if we see that, then we're probably going to see the breadth of the market push back above 80, and that could look like one of these moves here. That's the more bullish scenario, and that's still on the table at these levels. VIX. Flirting with that 20 level and bouncing around that range, 17 to 20. Majority bearish, getting the one tick to the upside as we're seeing a little bit of consolidation here in markets as well, but not a lot of volatility risk, at least as of right now. But remember, this is an up and down oscillator, so it's really what it's telling us is where the volatility level is at, and so when we're more looking for ranges in this case versus trending or momentum or anything like that. So we're sitting now down underneath that 20. That sometimes does also say, hey, if we don't have volatility, that's forecasting future volatility, and so when things are really quiet, that could anticipate more volatility. The only issue with that is it can stay low volatility for a long time. Anything below this level, you can see it can stay down there for weeks and weeks, but looking over here, then we get a spike on a sell-off. So not overly concerning at these levels. SHY seeing a little bit of a move higher, majority bullish on the daily. That's the short end of the yield curve, and we want to see this happening. We want to see this trend flattening and starting to continue to move higher, both on the daily and the weekly. What that tells us is that rates are trending lower, and we're starting to see that here as well. Majority bearish at 10 on the weekly, 12 on the daily. Some compression right here. We've talked about this pattern before. When we get compression, we get expansion, and then we get compression. These become decision points, and if that's going to advance the trend back down again, this is an area where that can start to happen. And we're also looking at a 618 retracement here that is holding up. So this 618, this bearish retracement, these are areas of resistance. So this is a big one. If it holds up right here and starts to reverse and we get compression and start to move down, that actually could be bullish for markets as rates may start to come back down a little bit. It's a little bit early to tell right here, but we're in that phase. Let's take a look at TLT, the long bond. This is the long end of the yield curve. We're seeing a little bit of a tick here on the daily. Majority bearish still at 13, but one move higher. And that one move that's happening right here is just that little green. You can see it's starting to curl back up. So that's giving us an indication that the super short time frame as far as the trend is starting to shift, and we can also see that on the price activity here as well. Not a whole lot happening here on this price pattern. We've got a lot of tight consolidation. You can see that how tight all of these red lines are compressed right here. That's compression on the short end of that time frame, and so we could see if rates we want to see bonds starting to move back up, particularly that 10-year, and we're seeing rates at 12 and 2, 14 still bullish setup on the 10-year. Dow Jones Industrial Average sitting right in The demand block now on this retracement, if I push this over just a little bit so we can connect this current trend that we've got from here to here, and some of our retracement levels, we did touch the 236 on Dow, and now holding up above those ranges, majority bullish as well. So bullish tone for the Dow still as well, and it's got some room. It could run through this before we really run into some significant overhead supply around that 440 range for DIA. Triple Qs, same story right here. Triple Qs working towards all-time highs. If we break out of these levels and gaining some momentum, we've crossed over now. We've got all trends moving higher and aligned bullishly as well. Sometimes we can still have majority bullish, and like this right here, they were all green right here, they were all green right here, giving us an indication that the trend is starting to shift. But now we've got the price is going to be sitting up here, and we've got all of these trends that are aligning and price above that, and relatively compressed. We could see a pullback into that uptrend. This gives us our bias to say, yep, we're bullish long term, we're bullish short term, but we may be a little extended. We're running into some supply. Could we retrace back down again? Let me move that chart over just a little bit here and see if we can get it to grab onto this location. That's the one we want to see. So pulling back to 498, the upper end of that demand block is still bullish and still in an uptrend, and that actually may be a really interesting area if that happens for kind of that springboard moving to the upside. Approaching the summer months now, if tariff news is still driving the markets, we may see a lot more volatility or continued volatility. If not, we may see just kind of this flat sideways move until we get some additional catalysts, whether that's economic data, whether that's earnings data. The Russell 2000 also holding majority bullish at 8 and 9 on the weekly time frame, but it's been the weakest of the indices that we're following, and gaining a little bit of strength right here. So we'll see if we get some continued momentum here in Russell. USO, which is oil, I'm going to pull it back out to this perspective we've been looking at here to see where we're at inside of that current playground, which is this range and this range, kind of hovering around that. So still holding up, be watching for, and we're actually gapping a little bit lower to that range. 66.31 is that low end of that range. 66.68 is where we're at currently, and back to majority bearish, but the extreme starting to compress a little bit. It's got a lot of work to do to get bullish, but it has been extreme to the downside and really slogging around right here at these levels. See if we get any motion to the upside here as well. Gold holding that upper range, swing low here, swing high. 299 is the 236 support area. Again, 236 is the momentum zone from this range here. Anything above the most recent high pulling back to this location means we're still in momentum, so we can move up, come around, bounce, head higher. If we dip down a little bit deeper, then we start to get into more corrective zones, and those are still bullish, but they just take a little bit longer. And so once we break that level, in this case it broke it, we're back up above it, and it works the same on this upper time frame as well. So we can see that pulling all the way back to 280 for gold still would be bullish and allow some of this overbought scenario to soften a little bit on that weekly time frame for gold. Just a lot of demand still there for gold. Silver also, keep an eye on silver. This pattern right here is now really compressing up near the 236 location of this swing high, swing low. This is our structure location, and we had bounced off of a 382, got all the way down to these levels in April, but we've bounced here. Now we're bouncing at this level. See if we can get a pop back up above this range. That could be bullish for silver as well. Let's take a look at a couple of stock ideas today. Boeing getting some confirmation on big volume as well. We've seen ACOG, which is an interesting price pattern, probably the best looking price pattern of the group. Increased volume, nice confirmation, symbol ACOG there, and that'll do it for today's update. Not a whole lot there in the new buy list, but there are some that are worth taking a look at. Have a great day and a great weekend.